So now we move on to the entries and targets section of this course. Now I'm going to go through the overview of the M15 timeframe on a line diagram first to show you where we want to be going down to our entry timeframe, which is our M1, to look for our entry model to get involved in some trades. I'll then go through a very powerful entry model on a line diagram, and then I'll show you it in action on the actual charts. Now, this entry model is very similar to the one I actually use every time I want to enter a trade, and it uses exactly the same concepts. There is, however, a little bit more to my personal entry model and a bit more understanding that is involved, but I thought that it would be a bit unfair to my community if I shared everything here on YouTube. Having said that, if you just use this entry model, it is extremely powerful and will increase your win rate by removing all the unnecessary losses that do not fit the criteria. Now, I will say you need to understand how to map fractal structure in your sleep. The most powerful thing about this entry model is that it is 100% mechanical. This means if you are looking to trade from the same supply or demand zone as me, you will get involved in every single trade, because the entry model is exactly the same for everyone. Now, I'm going to go through the overview of the M15 timeframe before getting into the entry model, and then the entry model will be a bit later on in this video. So what do we have then? We have a push up, a pullback, and then a break of swing structure to the upside here at point 1. Okay. After a break of swing structure, we expect a swing pullback. However, the internal structure can carry on bullish for a while, and therefore we can just follow that internal until we get that signal that the swing wants to pull back and the internal switches bearish to then short to the discount of the swing. Okay, so we have this swing break structure then to the upside, and what do we have at point 2? We have a visible pullback, but it is not significant enough compared to recent price action to call it a swing pullback. Okay, if it came down to here, then it would be, you know, a nice impulse, a nice correction, and then a nice impulse, and we'd have a swing break structure there. But it's just a small pullback. It's visible, but it's not significant enough compared to this bit of price action here. Okay, so it's just an internal pullback here. So we have that internal pullback, and then price reacts off something in this leg, and then breaks internal structure to the upside again. Okay, so our swing's bullish, our internal's bullish. At point 3 then, potentially we come into some higher time frame supply to the left, and what do we get? We get an M15 CHoCH. That is an M15 fractal structure shift to the downside. Okay, now the M15 CHoCH doesn't signal that the swing's going to pull back, so we don't know that the swing's going to pull back yet, but what the CHoCH does signal is that the internal is likely to pull back. Okay, the fractal structure signals when the turning points of the internal structure are. Okay, so we get this M15 CHoCH, and what does that do? Well, because it broke that structure, it creates this fresh supply above that we can then potentially look to enter in here and then take short. Now, we don't want to be targeting all the way down here, right? Because the CHoCH only signals the internal pullback. It doesn't signal the swing pullback. So potentially we want to target maybe 3R instead of the normal 5R, and target the discount demand of the internal, because we expect that the strong internal is still going to hold and still going to continue bullish until we get that break of structure to the downside, break of internal structure to the downside. Okay, so we can then look for shorts from here, and we want our targets to hit TP before we get to, you know, this extreme demand. Ideally, we want to get it at the discount of the internal, but if not, we want to get it before this discount demand, this extreme demand, because we know that potentially this demand, we could react off this demand and then push higher. Okay, so when we come down into this demand, then this is the extreme internal demand zone, and we can look to get long. Okay, because we can just follow that internal structure until it gives us that structure shift. Okay, the trend is your friend all the time. So we look to get long here, but instead of pushing up, it, you know, reacts off it and then breaks to the downside. So we have an internal break of structure to the downside. Okay, so that's fine then. We may have taken a loss, or we may not have got an entry here. That's absolutely fine. We take losses in trading, right? And we have this internal break of structure to the downside. Now, what do we expect? Well, we expect the swing is going to pull back to at least discount, and if not, to this extreme swing demand at the extreme of the leg. Okay, so now we can follow these internal ranges to the downside until we reach this discount demand. Okay, where are we going to take a trade from? Well, we've broken that internal structure to the downside. That means this is a strong internal high. We've started to pull back, and this is a weak internal, this is a weak internal low, okay? So at this point, we can either look for a sell from this supply zone, because this caused that break of structure there, or we can look for a sell from a supply zone up here, right? And then we can take that to the downside to target this weak internal low here, okay? So what happens? We react off this supply zone here, and our targets potentially we should aim for our targets to be hit before this weak internal low is taken out. But if it's just past it, then it doesn't really matter, because we're still targeting that discount of that overall swing range. Okay, so what happens then? We have that internal break structure to the downside, and we start to pull back. That means this is a strong internal high because it broke structure, and this is a weak internal low because it failed to break any structure to the upside. Okay, where are we targeting on a swing perspective? Still, we've had that break structure. We expect it to pull back to this discount demand, and then we expect it to target that weak swing high again. Okay, so from an internal perspective, we're happy now to short from a supply zone here. This is a nice supply zone here that we can then short from to target that discount demand of the whole swing leg. Okay, so we can look to enter here and potentially get our 5R before we hit this weak internal low. But if it's a little bit past, then that's absolutely fine, because we can target this swing extreme demand down here. Okay, so this is where we look for our entry model on the M1, and we target down here. Then what do we have? Well, we know that our swing structure carries more significance than our internal structure, and that is because our internal structure is only used to facilitate the swing pullback. Okay, this bearish trend on the internal structure is only used to facilitate the pullback to the discount of the swing structure. Okay, now that we're in the extreme discount demand of this swing structure, we expect the swing to break structure, pull back to it, then break structure to the upside. Okay, that's our expectational order flow. So when we're in this one, when we're in this demand zone at the extreme, we can then just look to enter on the M1 straight away on our entry time frame, look for our entry model to then target this weak swing high. Now, sometimes our entry model doesn't set up, okay? And instead of getting an entry here, we then get an M15 CHoCH. What does an M15 CHoCH do? It's a break of fractal structure to the upside, which then creates fresh demand that we can then potentially long from, okay? So at 0.7, if we didn't get involved here, if our entry model didn't set up just within this M15 demand zone, then we have an M15 CHoCH, and we've got a new fresh demand zone that we could then look for our entry model on the M1 for. Now, our targets then are, they could potentially be all the way up here at the weak swing high, because our expectation is that swing structure, break structure to the upside, swing pullback, and then a swing break of structure to the upside up here. Okay, so when we're in this situation, we've got a lot more to target. Okay, we've got a lot more potential profit to be targeting. So then price comes up to here, and at 0.8, this is not where we're going to look for a sell. Okay, technically, this is a strong internal high and a weak internal low. So from an internal perspective, we expect it to pull back into this supply and target this weak internal low. However, we know that our swing structure carries more significance than our internal, and our internal structure has done its job to facilitate this swing pullback, right? It's completed its job. There's no need for the internal to continue bearish anymore, because it's completed its job and it's facilitated the swing pullback to the extreme swing demand zone, okay? So we don't want to look for an entry here, because we expect the internal to now shift bullish to facilitate that next swing leg to the upside to target that weak swing high. Okay, so we're not going to look for an entry at 0.8. We then have this internal break of structure at 0.8. Okay, which we expected, and now we expect the internal ranges to hold until we take out this weak swing high. Okay, so what happens after this internal break of structure? We have an internal pullback. So this is our strong swing low, this is our weak swing high. This is now our strong internal low because it broke internal structure to the upside, and this is now our weak internal high because it has failed to break any structure to the downside. Okay, so then what happens? Price pulls all the way back into this extreme internal demand zone. What can we do? We can go down to our entry time frame again, onto our M1, and we can look for an entry within this demand zone straight away on our entry time frame, to then target at least this weak internal high, and if not, this weak swing high. Okay, so if we got an entry in there on the M1, then great, then we can target the weak structure. If we didn't, then we could potentially see an M15 CHoCH. Just like in this situation here, right? If we get that M15 CHoCH, it creates fresh demand that we can potentially take a trade from. Okay, so then when price comes back into that fresh demand, we can then take another long from this fresh demand to target where we're targeting this weak structure, this weak internal high, at least. And if not, then we can target this weak swing high. Okay, so there's a lot more potential when you're long, when the swing structure and the internal structure is bullish. Okay, so what do we have? We have this internal break structure to the upside, and then the internal pullback starts to form. This is now our strong internal low. This is now our weak internal high. Where did demand step in to break that internal structure to the upside? Well, this is a clear demand zone here, and then we have our extreme demand zone here, which is very clear as well. What happens is price pulls back, and it pulls back into this first demand zone where we can potentially look for an entry from. Okay, so what do? We go down to our M1 time frame, look for our entry model, very, very powerful entry model, and if it sets up, then we enter. Where do we target? Well, we want to target at least this weak internal high because we expect that weak internal high to be targeted, right? This is a strong internal low, and we expect to go from strong structure targeting weak structure. Okay, so we can target at least this weak internal high, and if not, this weak swing high. Okay, so we look for our entry model on the M1 in this 15-minute demand zone, M15 demand zone, to target at least this weak internal high, if not this weak swing high. Okay, and then what do we see happens? We break through that weak internal high, and then we target this weak swing high, causing that break of swing structure at point 11. So this is the really, really powerful entry model that can be used on the M5, M3 or M1 as your entry time frame. Trust me, when you look to enter using this model, it will definitely increase your win rate by decreasing those unnecessary losses. Now, this is all fractal structure, which is why I said you need to be very comfortable in mapping fractal structure, as these entry models can present themselves very quickly, and you need to not be hesitating when entering trades. So the 5 criteria for the entry model is mitigation, fake CHoCH, liquidity sweep, real CHoCH, and then a retest. Okay, they are the only 5 criteria that we need when we are in a supply or demand zone. So I'm going to go through this example on a line graph to show you exactly what I mean. Now, I do just want to reiterate that our trade ideas are all formed from the higher time frames and from the M15 time frame to get our supply or demand zones, and then we only go down to our entry time frame, which for me is the M1, but for you it could be M5, M3 or M1. We only go down to those entry time frames when we are in a supply or demand zone, right? An M15 supply or demand zone. So going through a buy example then, we've done all our analysis, right? And we have mapped this demand zone on here. So this is a demand zone that in our pre-session analysis, we know that we want to trade from. Price comes down and we wait for it to mitigate this demand zone, okay? So that's the first step. As soon as we get a mitigation, so as soon as price comes in here and taps into our demand zone that we have marked on, we then have that first criteria of mitigation, okay? Now, once we get this mitigation, we don't do anything, and we wait for price to give a CHoCH. Okay, so that's a break of fractal structure to the upside. So what happens here? This is fractal structure, remember, and we push down, we pull back, we push down, we pull back, and then we break fractal structure to the upside. Okay, now lots of people would then be like, okay, we've had a break of fractal structure, so now we're going to enter, and then price is going to go to our TP, right? But we don't do that, because we are patient and we increase our win rate by waiting for a liquidity sweep. Okay, so this fake CHoCH induces a lot of buyers to get involved around here because they think price is going to now go to the upside. Whereas instead for us, for our entry model, this fake CHoCH generates strong liquidity below this extreme low. Okay, so this fake CHoCH here then generates strong liquidity below this low. We then wait, right? Price can do whatever it wants. It can go up here, it can go around here, it can move sideways until we get a sweep of that strong liquidity. Okay, so we get this CHoCH, then we generate this strong liquidity below this low, price comes down, and then we sweep this strong liquidity, which can either be with a wick or a candle body close. So now what have we had? We've had a mitigation because we've come into our M15 demand zone. We've had a fake CHoCH because we've had this first CHoCH that people are going to think price is now going to move up, but it doesn't, right? It's a fake CHoCH. And then what does that fake CHoCH do? It generates strong liquidity below the low, and then price comes down and we sweep that strong liquidity here. So we have 3 of our entry criteria already. We have mitigation, we have fake CHoCH, and we have liquidity sweep. Then what we wait for is another CHoCH, right? We wait for a shift in fractal structure again, which is now the real CHoCH, okay? So we've had the fake CHoCH, we've swept the liquidity, and now we have that real CHoCH here. So this now is where we want to get involved. We want to get involved after we've swept that strong liquidity and we have another fractal structure shift to the upside. So then what do we wait for? We wait for a retest of an M1 demand zone where we will put a buy limit order on. Price breaks this fractal structure. Price comes back into our M1 demand zone. It tags us in, and then hopefully, potentially, we go on to then target those weak highs. Okay? So you're entering on the M1 as an entry mechanism, and you're targeting M15 structure. So the M15 weak high will be somewhere up here, right? So that's the buy example. Now we'll just go through the sell example on the line graph. So what do we have first then? Well, we have a mitigation, right? Because price comes in, and as soon as price comes into this supply zone that we've marked on in our pre-session analysis, we have that mitigation of M15 supply. Then what do we wait for? We wait for the fake CHoCH to happen, okay? So we don't do anything, right? Price can do whatever it wants until we get this first CHoCH. And we expect that this first CHoCH is a fake CHoCH, okay? What does that fake CHoCH do? Well, it generates strong liquidity above this high. Why is that? Because people are going to be induced to buy here and then to target that weak low. But we know that the strong liquidity is likely to get swept before that happens, right? It's a sell trap. This fake CHoCH is to trap early sellers in, which then get swept out, which then provide the liquidity for our trade, okay? So we have this fake CHoCH, generates that strong liquidity above this high, and price then comes up and sweeps this strong liquidity, either with a wick or with a candle body, it doesn't matter. So we then have that strong liquidity sweep above this high. Then what do we wait for? We wait for the real CHoCH to happen. So we wait for another fractal shift in structure to the downside. We get that real CHoCH to the downside here. And then we have the 4th criteria of our entry model, okay? So we have this CHoCH to here. And now what do we wait for? We wait for a retest of the M1 supply zone, which is here, to then pull back into our supply zone. We have a sell limit set here. We get tagged in, and potentially then we go on to target the M15 weak low, okay? So this is our entry model, okay? We have 5 criteria that need to be met and it is 100% mechanical because it is all using fractal structure, okay? So we have a mitigation. We have to have that mitigation of supply or demand. We then have a fake CHoCH, which generates strong liquidity above the high or below the low. We then sweep that strong liquidity with either a wick or a candle body close, and then we get a real CHoCH. We then pull back after that real CHoCH into M1 demand or supply to get that retest, to then enter with a buy limit order or a sell limit order, and then price goes and targets our TP or the weak structure that we are targeting on the M15. Okay, so now I'm just going to run through this entry model on the actual charts so you can see it in action. Okay, so in this next part, I'm going to go through and explain what I've just said on the line diagram for the entry model, and I'm going to put it into a real life chart example. Okay, so I'm not going to go through the whole high time frame and the M15 or anything, but this is my M15 supply zone, this is my M15 internal high, and this is my M15 internal low. Okay, so at this point, I have my M15 supply zone marked on, and what am I waiting for? Well, I'm waiting for a mitigation of that supply zone, right? So these are the 5 criteria in my entry model, okay? And that is mitigation, fake CHoCH, liquidity sweep, real CHoCH, and then a retest, okay? So what's the first thing we look for? The first thing we look for in this order is mitigation, okay? So we only go down to our M1 time frame when we get that mitigation, okay? So this is our M15 supply zone, right? This big red box. And when we get this mitigation right here, this is when we go down to our M1 time frame and we look for our entry model, okay? So as soon as we tap into this supply zone, we have that mitigation. Now what do we wait for? We wait for a fake CHoCH to happen, okay? So if we play price on, this is all one fractal structure leg because all of the following candles break the previous candle's high. We then pull back and then we get a CHoCH, okay? Now, we know that this CHoCH is likely going to be a fake CHoCH, okay? Lots of people are going to see that CHoCH, see that structure shift, then try and enter somewhere to then take it all the way down to that weak M15 low. But we know, because we're patient and we want to increase our win rate, we know that this CHoCH is likely just going to be a fake CHoCH to induce all of those early sellers into the market to target that weak low, okay? So what do? Well, this fake CHoCH then generates strong liquidity above this extreme high, okay? So this is M1 strong liquidity above this high. Now, what do we wait for? We wait for this strong liquidity to be swept, okay? So we do absolutely nothing until this strong liquidity is swept. If price does come down to, target this weak internal low, then you've just missed the trade, which is absolutely fine, right? Because we use this model to increase our win rate and to get that higher percentage return. So we have that mitigation, and now we have the fake CHoCH as well. And we wait for this liquidity, this strong liquidity above here, to get swept. So we play price on then, and in this example, it does go on for quite a while before coming back to sweep our high. But it does do that in the end. So we come up to here then, and what happens? So this is our fake CHoCH, and we've pushed all the way down to here. We didn't come down and mitigate anything down here, and we didn't take out this weak internal low. And so this M1 strong liquidity is still valid for me. So what do we see then? Well, we see price come up, and with this candle here, it sweeps this strong liquidity, right? I'll just delete these 2 lines. So what have we had now? Well, we've had our mitigation, okay, because price came into our supply zone. So we've had our mitigation, we've had our CHoCH, we've had a fake CHoCH here. What does that fake CHoCH do? It generates strong liquidity above this high. We then push up and we sweep this liquidity. We sweep the strong liquidity above the high. And now what we need to wait for is a real CHoCH, okay? So now we just wait for fractal structure to shift in our favor and shift bearish again. So the supply zone's still intact, right? It's not failed, so the trade is still valid. Push down. Our fractal low at this point, right, is the nearest candle to this fractal break of structure that failed to break the previous candle's high. So our fractal low is this black candle here. So that would be our CHoCH if it comes down and breaks it. And then what happens here is we get that CHoCH to the downside, okay? Now, we have mitigation, fake CHoCH, liquidity sweep, and now we've just got that real CHoCH to the downside. So now what are we looking for? We're looking for that retest of M1 supply or demand. In this case, it's going to be supply. Now, I'm not going to refine it completely to this point here, right? Because that is a really, really small supply zone. It is what? 1.1 pips, right? So you can either make it a bit bigger, you can either use that, or I would just probably use these two candles here. Now, why am I choosing this supply zone instead of the extreme supply zone up here? Well, that's because this extreme supply zone is already mitigated, right? Price pushed up, it came down, it came into this supply zone, and then it pushed and broke that fractal structure to the downside. So this supply zone up here, completely mitigated. I'm not even bothered about it, okay? So now I look for the nearest supply zone to that, and it's going to be the one that is in the chain of this supply zone, and that's going to be this zone here, okay? Now you can then put your sell limit on, right? And you can either put your stop above this high or above this high. Now I usually like to do it above the extreme high, just to give me a little bit more breathing room. And you know, it's still only a 3 pip stop loss, so it's absolutely fine to just enter like that, because you know, having this 3 pip stop is still a really, really small stop, and you're still getting massive risk to reward ratio to target the downside, okay? So this is where my entry would be. And then what happens? Well, we wait for that retest to happen into this M1 supply zone, okay? What happens? Price pushes up, pushes down a bit, pushes up and tags us in to this trade, right? It tags us into this sell. This is our sell limit that we had on. Price comes up and tags us into this sell. Then what do we see? Well, we expect now that price is going to want to go down and target that M15 weak internal low to the downside, okay? And then if we play price on, what happens? We push down, we get a really nice push to the downside, a nice pullback, and then we get a bit more of a push. Now at this point, right, our M1 structure looks like this. Push down, pullback, push down, pullback, push down. So if it were to come back to break even, it would probably likely just carry on and take out our stop loss. So at this point, once we get a break and close below this low here, I'm very happy to take the risk off the table and move my stop loss to break even at 1.08561, okay? So I'm at break even, I'm completely risk free in this trade, and life's good right now, okay? So play price on, and what happens? We go down and we smash that 5% target. Now, if you are going to use some technical targets, then you could potentially aim for this M15 internal low, which does eventually get taken out, I think. Yep, so that low does eventually get taken out, which would have been a nearly 9R trade. But for me, I usually only target 5R, a fixed 5R. It just allows me to get in and out of the markets quickly, easily, and there's no kind of discretion of where I'm going to place my stop loss. So that was a really nice trade that I took, and this was the entry model again, right? So what have we had then? We've had a mitigation over here, where price came into our supply zone that we want to take a sell from. We then had a fake CHoCH here, and what does that fake CHoCH do? Well, it generates strong liquidity above this extreme high here. Price then can do whatever it wants in between until it comes up and sweeps this strong liquidity. Then we get our liquidity sweep here. So we've had mitigation, fake CHoCH, liquidity sweep. Now what do we look for? We look for our real CHoCH. Now, our real CHoCH came from here because price pushed up. This was our fractal low. This is our fractal low here, and price comes down and breaks this fractal low here. Then what do? We have our real CHoCH and we just wait for our retest. We put our sell limit on the demand or supply zone on the M1 or the M3 or the M5, whichever entry time frame you want. We then put that sell limit on, price comes back, it tags us in, and then pushes to the downside, targeting our 5%. Now, the really powerful thing about this entry model is its ability to increase your win rate, okay? You are going to miss some trades that you would have entered if you just entered straight away on a CHoCH. However, lots of these trades do fail and they don't end up playing out. So this entry model, you know, it really is good to increase that win rate because you wait for a fake CHoCH to happen and then you wait for that strong liquidity that was generated to be swept before you enter. Now, sometimes what's going to happen is you get that CHoCH, it's not going to be a fake CHoCH, and it does literally just go to the downside, right? And that is just going to be a missed trade. But lots of times you're going to get it where you get a CHoCH and then get a sweep, and then you've lost a trade, and then you maybe don't want to enter again on another CHoCH, and it just gets really difficult and really emotional, right? And as traders, we want to be as emotionless as possible. So having this entry model with that fake CHoCH and with that generating that strong liquidity above this high and then getting that strong liquidity sweep and then waiting for the real CHoCH to happen, that really will increase your strike rate, increase that win rate, and allow you to be a lot more profitable in the markets.